Welcome back to the Trade Academy. I will be explaining the second phase of the market. But before I go into that, I have to explain the first phase. Just a brief explanation. Because if you can't identify the first phase, it will be difficult to identify the second phase. So the first thing to do is to shrink or zoom in. Make your chart. Zoom in your chart just like this. Now, what do you see? We can see the candles, they are above our moving average. They are all up. So that means we are in an uptrend. The market forms higher high, higher low, higher high, higher low, higher high, higher low. So the first phase of the market is to determine the trend direction by knowing where market is breaking structure. Is it breaking structure upward or is it breaking structure downward? Now we can see clearly that the trend direction is up. This trend is up. So that means we expect markets to break structure to the upside. So each time market comes and breaks structure to the upside, that means market is experiencing the first phase because it's breaking structure to the direction of the trend. So take for instance, we can see this area. You can see how market broke this high. See, it broke the high with this particular candles. So, and the trend direction is up. So this movement, these momentum candles, these candles that are of the same color, breaking this high is our first market structure. So now we see a new high being broken again by this momentum candle. So that is our first structure, breaking of high in the trend direction. Now the second structure or the second market cycle is when price does this. Take for instance, this is the first. It keeps breaking structure upward. So each time it breaks an high, that is the first structure. So each time it breaks an high, we'll see price retracing down. So the second phase is the retracement phase. A break of this high, then we see a retracement. A break of this high, we see a retracement. So the second phase of the market is what we can term as retracement, a retracement phase. And how do we know that? First thing is we have to identify our break of structure. So look at the candles that broke this structure. The whole of that candle with huge momentum breaking this high. So the whole of this candle breaking this high. See all those candles with huge momentum. Now after breaking the high, we expect market to do what? To reverse. So this reversal is the second phase of the market. So after a break of structure, we expect what? A reversal. Now to be able to pick trades in that direction, in the direction of the reversal, what we have to do is we have to mark our yesterday's high or low depending on the trend direction. Now we have our yesterday's high here with how do we know that this is our yesterday's high? This is a daily separator. So it's not necessarily that we use yesterday's high. We can use weekly high, we can use today's high, present day high or low. So in this scenario, I'm using today's high, I'm using yesterday's high. So what I will do is I'll take my horizontal tools and mark that yesterday's high. So all I need is for price to take out this yesterday's high. We need price to take out this yesterday's high, and we can see it, then price should now close below that yesterday's high. This is a clear sign for us to do what? To sell, because price is no longer going upward. And another confirmation, we have divergent. Look at when you connect the highs and connect the highs here, we have divergent, giving us another confirmation. Now let's look at gold. When you look clearly at gold, you will see that this is last week, this is 2 weeks ago, this is 1 week, this is 3 weeks ago. We can see clearly that we have a low here for 2 weeks or 3 weeks ago. Now look at what happened today. Market came and broke structure. Remember, breaking of structure is the first cycle in the market. How do we know it broke structure? Look at, when you zoom in, we see that the trend is down and price keeps breaking lows, because in a downtrend we expect markets to break structure to the downside. So market keeps breaking lows, it keeps breaking lows. So it broke this low from here. Now price came again and did what? And broke this low with this candle. So that is the first phase of the market cycle. Now the second phase, after the first phase, we expect markets to follow the second phase. The second phase is now reversal. Now, how do we know when to pick the reversal? We look at our previous day low or previous week low. Now looking at this, we can see 3 weeks low right here, and that 3 weeks low was taken out by this bearish candle. And now what do we have after that? We have candle closing above that week low. So this is to tell us that the market is set for a reversal. That is set for the second phase. Now how do we do this? We connect our TDI, the TDI, to check for divergence. Since this is my point of interest, because that is the low that I'm interested in, market broke through that low, so I'll connect my divergence, connect the lows, then connect my lows also on my TDI. What do you see? You see market going upward on TDI. So this gives you room to buy in this trade, and you stand to make all these profits. Now I have the same thing on Euro USD. Euro USD has been in a downtrend. So the first market cycle is, we expect markets to be breaking structure to the downside, Now, which is what I did here. I marked my last low and it was taken out by this. Then market reversed, because after the first cycle we expect market to reverse. That is the second cycle. It came back and took out this low. So what I also did was, I came to my 15-minute time frame. We can use 1 hour, you can use 15-minute time frame, but let's use 1 hour. I'll also explain 15 minutes. I marked that low because that is my point of interest. Price came, took out that low and closed above it. So this has already indicated that market is no longer going to sell. Liquidity has been grabbed from this low. So that was what happened. We see price buying, and when price bought, how do we know that this? How do we get extra confirmation? When you connect your lows and connect here, we can see this is coming downward and this is kind of going upward. That is an opportunity to buy. And also let's check 15-minute time frame. On 15-minute time frame, looking at this, we had a nice W pattern, and when you look at that W pattern, we can see liquidity grabbed And what happened? Our TDI divergence again. TDI divergence. That gave me an opportunity to buy, and I bought and I was in profit. So these things are working. So whenever market breaks structure to the downside, let's say we are in a downtrend, market breaks structure to the downside, that is the first phase. The second phase is now this reversal. So in the next video, we are going to talk about the third phase. So if you like the video, subscribe so that you can get more explanation on the third phase. And also, if you want to join our Telegram group, so check the description, you will get the link.